Today's topic is foreign source income. This is Simon of Dongnam Accounting Corporation. I'm a CPA in Seoul, Korea. I'm a member of Elliott Global Alliance, which is the network of CPAs and lawyers around the world. Foreign source income, which means when belong to which fiscal year. This is important to determine the statute of limitation. So there has been some dispute on determination of imputed time between taxpayer and tax office. The statute of limitation under Korea tax law is, most cases, 5 years. When fraud or illegal method involved, domestic transaction 10 years, international transaction 15 years. So the same fraud or illegal method, when it comes to domestic, then 10 years. When it belongs to international transaction, it will be 15 years. So international tax transaction is 5 years longer. There is a ruling from the court. Unless proven incorrect, the date of cash inflow can be generally deemed as imputed time, because this is easy to know, and then this is widely used. Of course, taxpayer can argue by submitting necessary evidence. There are some penalty on missing or understating tax filing, but in this case also, in the case of international transaction, it is very intensifying. So penalty on missing or understating tax filing, there will be a certain rate of penalty on missing or understating tax filing. Most cases, usually, normally, 10% to 20%. When miss the tax filing, 20%. When understate the tax return, is 10%. Fraud or illegal method involved, then domestic 40%, international transaction 60%. Also, in this case, the penalty rate also is higher than domestic when it comes to international transaction. So the definition of international transaction is in case where all or part of the person involved in the transaction is non-resident or foreign corporation. So when a Korea resident deal with the foreign company or foreign non-resident, then they will be considered as international transaction. You can think about some case, penalty on missing or understating tax filing. The name of domestic corporation AA, the Singapore corporation SS, representative AA, who is a Korea resident, the name is RR. AA sell used machinery to SS at 10 million US dollar. 10 million US dollar is the normal price. In order to give RR 5 million, AA sell it to SS at 5 million on the document. This is a fraud. SS pay to AA 5 million and RR 5 million respectively. RR missed the tax file. In this case, the transaction between SS and RR is international transaction. So 15 years of statute of limitation applied, and 60% of penalty rate also applied to RR. Also AA, which is a domestic corporation, decreases taxable income fraudulously, so 5 million needs to be inclusive when compute the taxable income with the same penalty rate, because this also is international transaction. Another case, domestic corporation is AA, Singapore corporation is SS, representative AA, a Korea resident is RR. AA sell goods through SS and pay 3% of commission to SS. In reality, the fact is that SS is owned by RR and SS practically do not provide service. So the commission paid to SS actually belong to RR. In this case also, transaction between SS and RR is international transaction. So 15 years of long statute of limitation is applied, and 60% of penalty rate will be applied. Also AA, in terms of AA decreases taxable income, so 3% portion of commission needs to be inclusive when compute the taxable income with the same penalty rate, because transaction between AA and SS is also international transaction. Thanks for being with us. For details, please do not hesitate to contact our email. Thank you very much.